Ladies and gentlemen, good day and welcome to the Q3 FY23 earnings conference call of Onward Technologies Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star followed by 0 on your touchtone phone. Please note that this conference is being recorded. At this time, I would like to hand over the conference to Ms. Chaiti B. Gujarati, AVP at Valorum Advisors. Thank you, and over to you, ma'am.
Thank you. Good evening, everyone, and a warm welcome to you all. My name is Chaiti Gujarati, and from Valorum Advisors, and we represent the investor relation of Onward Technologies Limited. On behalf of the company, I would like to thank you all for participating in the company earning call for the third quarter and 9 months ended of financial year 2023. Before we begin, a quick cautionary statement. Some of the statements made in today's Concall may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on the management's beliefs as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earning conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, I would like to introduce you to the management participating with us in today's earning call and hand it over to them for opening remarks. We have with us Mr. Jigar Mehta, Managing Director of Onward Tech. Without any further delay, I request Mr. Jigar Mehta to make his opening remarks. Thank you, and over to you, sir.
Thank you, Chaiti. Good evening, everybody. It is a pleasure to welcome you all to the earnings call for the third quarter and 9 months ended financial year 2023. I hope you're all keeping well and safe. I'd like to congratulate and share with all of you our team performance for delivering another quarter of consistent growth and achieving the highest ever quarterly revenues of 116 crores. We continue to see very robust demand in the market in our focus materials, in our focus verticals. One is the highest being the industrial equipment and heavy machinery, and second, transportation and mobility. Third, new vertical healthcare continues to grow at a good pace, and we're seeing very good momentum there as well. Both our international and Indian businesses over the last 90 days have strong growth visibility, and which was evident last quarter, even in the midst of a lot of holidays and both in India and North America and Europe. Our core regions, our focused markets, continue to only be North America and Europe, which includes the UK. Now, let me take you quickly through the Q3 financial performance at a consolidated level. Operating income from our customers was at 116 crores, which grew at a remarkable 50% year-on-year basis. Our EBITDA was also reportedly at approximately 6.6 crores, with EBITDA margin standing now at 5.7%, with continuous improvement every quarter, which you should expect. Net profit after tax is at rupees 2.5 crores. We experienced substantial growth in revenues, as I mentioned earlier, from our focused industry verticals, and we are continuing to invest both in our TAP program, which we have shared earlier, which is a talent acceleration program, and in a lot of lateral hiring to meet the customer demand. Our industrial equipment vertical now contributes 55% of our revenues, and the transportation and mobility, which is mainly the automotive industry vertical, contributes 30% of our revenue. Healthcare is at a good pace at 8%, and we see that increasing quarter on quarter or at least on an annual basis in 2023. Our revenues, which comes from the others category, continues to decline as a lot of the projects come to a natural end, and we are channelizing all the resources and our investments towards our focus vertical. Digital line of business which is our core and the biggest focus area and the biggest investment area of the company, continues to see very good traction and delivered double-digit growth, now contributing 16% of the consolidated revenues for the 9 months of FY23. We now have 97 active clients, of which 15 contribute $1 million per year in terms of revenues. And our top 25 customers now contribute 80% of the consolidated revenue as well. We have a diverse global team spread across Canada, North America, UK, Europe, and India, and have now approximately, now at the end of the quarter, Q3, we ended at 2,973 employees with 20% women engineers and employees on a full-time basis. And lastly, to conclude, we continue to see, starting 2023 or in Q4, very strong positive demand from both our existing customers, our top 25 customers, and the balance 70 customers, which we have recently won over the last few years. And we continue to believe that we are well aligned to deliver double-digit margins in 2023. With that, we can open the floor for questions. Over to you, JP. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The first question is from the line of Ravi Kumar Naredi from Naredi Investment. Please go ahead.
Thank you, Vikramji, to giving me the opportunity in first number. Sir, again, congratulations for nice result. My question is, DG Drive Distribution Limited and Saregama, what is happening? Will Saregama shareholder receive anything in this company? Hello?
Sorry, I am not sure whether this question is for Onward Technologies.
Okay. Again, I'm repeating simple word. DG Drive Distributor Limited and Saregama, one EGM happens some days back, where you are doing some NCLT provision, you are doing some changes. So, will the Saregama shareholder receive any share of this new company?
Mr. Reddy, hi, Jigar Mehta from Onward Technologies. I am not sure if this has anything to do with us. We are not associated with them.
Okay. So, there is no...
Thank you. Mr. Naredi, may request that you return to the question queue for follow-up questions. Participants, to ask a question, you may press star and 1. Reminder to the participants, anyone who wishes to ask a question may press star and 1. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The first question is from the line of Pratap Maliwal from Mount Intra Finance. Please go ahead.
Hi, am I audible, please?
Yes, you're audible.
Yeah, thanks for taking my question. I was just wanting an update on the TAP program. I think last quarter we had said that we are not planning to add to the program in Q3, but in Q4 or Q1 of next year, as soon as we see that those robust margins. So what is the update here, and what level of margins are we looking at to restart the program?
Hi, good afternoon. So our TAP investments continue to gain a lot of momentum, and we have started the investment in the TAP program. As shared last quarter and reiterating this quarter as well, our margin improvement this quarter, we are all driven with a very focused goal of delivering double-digit margins, I believe, which will happen now very soon. And the TAP investment is our investment in both the fresher and the lateral hiring, where we train them on new areas, has already kick-started. So recently, we have started a good batch in Bangalore and Chennai for power electronics. Similar, we will keep doing it based on the customer demand.
Okay. So can you just provide the number of the net additions in Q3 to our workforce?
So for power electronics, we started with a batch of 25 engineers. This is for one of our customers.
Okay. And
So the total investment for last year was the total people, new additions we added here was about close to 300 plus. And we believe we will add that this year, that number, if not much more.
okay, sure. And in Q1, I think we had called out that we were awarded a large multi-year deal from one of the largest global automotive companies in the digital space, which will reflect in our results in the coming quarter. So just wanted to ask, have the revenues kind of started flowing in, and what is the nature of the work that we are doing for them? I just wanted an update there.
Yes. So the growth momentum that you are seeing in Q3, we did about, in Q1 of last year, when we signed a contract, we are doing about 93 crores of revenue per quarter. We are now at 116 crores a quarter, and we continue to see very good momentum going up. And all the revenues, the majority of the growth that we are seeing is coming both from the digital space and the embedded software space. And in this particular automotive OEM, the entire revenue is coming from data analytics and data science. That's where the customers outsource the work to us.
Okay. Thank you. Thanks for taking my question. Yeah.
Thank you.
Thank you. The next question is from the line of VP Rajesh from Banyan Capital Advisors. Please go ahead.
Yeah, hi. Thanks for the opportunity, and congratulations, Jigar, on good set of numbers. Just a couple of questions. One, on the growth side, this 5% quarter-over-quarter growth seemed light in comparison to what you have been doing in the prior quarters. So is it primarily furloughs which to this, or was there something else that you want to call out?
It was better than hi, Rajesh. It was better than what we expected at the start of the quarter, and especially because of the nature of the holidays. And we were not sure whether, especially in the manufacturing sector, automotive in particular, whether the customers will have furloughs and/or they will have global shutdowns, especially in their factories. And a lot of them did have that, but customers did, because of the ability to work remotely, we were able to do a lot of work, or our delivery team was able to do a lot of work remotely, and that gave us the boost, especially in the last couple of weeks.
Got you. The second question is regarding the standalone results versus the consolidated. So if you look at your EBITDA margin, it's 8% for standalone in this quarter and 5 and change for the consol. So the question is that for the delta, do you expect the margins to start getting better from here on, or how should one think about the non-standalone business?
So great question. No, absolutely. So if you look at our standalone revenue, which is mainly our revenues which comes from the India business unit, or the work that we do for the captive centers in India, and second, it comes from the offshore revenues. That's where majority of our TAP investments went in. That's where majority of our lateral hires would go in, and in upgrading all the infrastructure. So all the costs were loaded there last year in 2021 and for the initial few quarters of 22. Now they all are at mature level, when everybody is billing at full capacity. So that's where the margins are improving, and you will see a healthy improvement quarter on quarter. On the consolidated level, it comes mainly from North America and Europe, where we count the revenue on site, where the work we are doing at the client sites or remotely in Europe and US. That's where majority of our investments went in the last 2 years as well, where we added a lot of leadership and sales manpower cost there. And that also is now, I think people are getting productive, they're settling down well, we are getting a lot of traction, we've signed a lot of new clients, a lot of new MSAs, and you will continue to see a beautiful momentum as we take this company from 370 crores to 100 million, which is our first stated goal. So as soon as we see more traction on the on-site, our margins will improve there as well.
Great. And lastly, a few quarters back, you had talked about the vision of having 10 clients with $10 million each, so as to get to your $100 million goal. If you could just update on that, how is that coming along? I know you gave some stats on 1 million plus clients, but just trying to understand how many clients have started to get into that $5 to $10 million dollar revenue range, or even 10 million plus.
So great question. We're not sharing that detailed information yet because we're still a very young company in terms of size and from a competitor perspective. But we are seeing, we've already shared, 80% of our revenues comes from our top 25 clients. And from next financial year, we do hope to share much more information. But we have seen a lot of clients which last year, which were at 1 million, have already crossed 3 million. We have clients which have now crossed $5 million as well. And very soon we'll have our first 1 or 2 clients crossing $10 million. But we hope to share much more detailed information with all of you very soon, probably next financial year.
Okay, great. Wonderful. I have more questions, but I'll just get back in the queue.
Thank you.
Thank you. The next question is from the line of Yash Somani from Girik Capital. Please go ahead.
Hi. Congrats on your numbers. I had a question on, margins. You've obviously spoken about getting to double-digit margins. I just wanted to get a sense of what margin levers you see, A, in the near future, and B, more from a longer-term perspective. And, how should we tie that in as to with what percentage offshore we can eventually get to?
Yeah, hi, Yash. So in terms of margin, our focus continues to be, so let me just talk about margin, just how we are looking at margin. For us, margin improvement came from, in a very simple 4 particular areas. One was our massive investment that we did on the tap side, which is now running at a full maturity, and more customers have seen the success and are proactively asking us to fund a particular new batch, right? So they're doing it jointly or collaboratively with us. So that upfront huge investment is coming down. Second, for us, margin or the big cost came in from, instead of adding one sales per people that we did traditionally as a young company, we added a lot of 30 plus people in the same time last year. All of them, I would say majority of them, are doing a fantastic job settling down well. They all came from tier 1 companies. And we're going after new clients and new OEMs, in particular in North America and Europe. So now a lot of them where we have actually done the pilot projects, we've been selected as a new supplier, and now we are providing services to them, whether it's on-site or offshore. So there's traction there from zero revenue against a particular cost. Now they all are reaching at a good stage. Third is, for the last 3 years in particular, we had no client annual rate increase, which is a very normal trend or a particular trend in a services company. We have seen that majority of our customers who we supported during COVID times have all started proactively giving us the rate increase, or the discounts that they had in COVID times are all going away. And that's also affecting the margins as well. And that's where we saw positive improvement last quarter, and you will see that next quarter as well. And we do believe it will be quarter on quarter for the rest of the year. And fourth, as you rightly mentioned, is the expansion of the offshore business. For us as a young company, and we've discussed this in last quarter or last couple of quarters, is offshore does not start from day one. Initially, for us, what we've seen when we work with some of the largest companies in the world, initially a lot of the work starts with on-site. Because customer wants to get to know you, we have to prove our capability, we have to prove our customer engagement, prove our understanding or the working relationship with these large companies. And once you build that initial trust, that's where the offshore starts. And that's where, again, the margin expansion will happen. So, and we are seeing that maturity quarter on quarter right now. And what we also see is we don't need to invest too much more to get from current, let's say, $55 million of revenue, where we will be end of Q4, which we are projecting, to the 100 million mark. That we have won the customers. Now it's about just focusing on execution, about delivering, about adding value to the customers. And eventually, all these companies being headquartered in US and Europe are leveraging Onward technologies, mainly from obviously the offshore, the cost arbitrage, the value that we can bring in on the digital side. And that's where you will see double-digit margin.
Awesome. Thank you so much for explaining this to me in this detail. Thank you so much.
Thank you.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. Participants, to ask a question, you may press star and 1. The next question is from the line of VP Rajesh from Banyan Capital Advisors. Please go ahead.
Yeah, thanks again. So Jigar, one question on the revenue side. If you can talk about how much is coming from mechanical versus embedded system, any further bifurcation on that side?
Sure. So we club our revenues, if you see the earnings deck, into 3 categories today. There is the ER&D space, where we have clubbed the mechanical and the embedded, which is about 70% for the last 9 months. The second is the digital revenue, which was close to 0 last year, is now at 16%. And then the traditional old school IT services work that we do, which is the application maintenance contracts, which is now on a 9-month trading period, is on at 14%. And that number continues to go down as both our digital revenue and our revenues from the software piece on the embedded piece continues to grow.
Right. So if you can share the number for the ER&D revenue between mechanical and embedded.
So again, Rajesh, we're not sharing that yet, but we hope to start doing that from next quarter, from next year, next financial year.
Okay. And, in the last Concall, you talked about the 25 crore investment that has gone into building capabilities over the prior 12 months. So any update on that? How much more investment are you making like that, or is that kind of investment starting to come down?
Again, it's a great question. So the investment that we made was, again, in three areas, right? So one was on delivery capabilities. The second, which is continuous, and every quarter we will do that, and I will touch base a bit more about that a bit later. The second is on the sales side, where I think we are in a very good space where we are today in terms of headcount. And third was the TAP part, where we were showing to our new customers in particular that we have the ability to invest, train, deploy, and actually deliver for the client, right? So the last two, I don't think we need that huge investment going forward from where we will be by end of Q4 to where we want to be in the next 2-3 years. But the first part is a continuous investment where we are investing proactively. So in this quarter, Rajesh, in particular, our big investment right now, our entire team is focused on that, is to expand our embedded software piece. We are seeing a huge traction from our clients there. We're getting huge RFPs. We're getting a lot of demand from not only our top 25 clients, but all the new clients that we have recently signed the MSAs in US and Europe, both for offshore and offshore and on-site. And that's where we're going to invest very big. So as we speak, we are looking at adding a lot of depth at the leadership level on the embedded side. And that investment will continue, and that's an investment which will it directly impacts top line and bottom line.
Got it. Thank you so much. That's all I have.
Thank you. The next question is from the line of Amit Mittal from Blue River Capital. Please go ahead.
Hi, Jigar. So congratulations on the good Q3 numbers. Just had a couple of questions. So one is, our headcount has declined quarter on quarter. right? I think we are down some 70, 80 employees. So I wanted to understand, just trying to tie that with you on the growth that you will see this year. I mean, how do we read this decline in headcount versus the commentary?
Sure. So our headcount came down by 63 employees last quarter, and that was in particular for one of the large projects, multi-year project that we had traditionally in our IT services part of the space in India, where the revenues come from the others category, where the contract was coming to an, it was an opportunity for us to extend the contracts by multiple new years, or it was an opportunity for us to sort of exit the contract. And we, with the support of the board, made a decision that we should exit the contract. So we took the entire team of 180 odd engineers. We transitioned and we allowed the customer to do a rebadging because obviously the customer was very important and we have a 10-year relationship with them. So and hence the overall headcount came down. Otherwise the number would have gone up by 120, 130 people.
Understood. And would you also like to highlight any, any contract, new contracts or deal wins or any marquee client additions over the last 3 to 6 months?
Again, seeing a lot of traction, especially in US market for us. We have signed, and again, mainly in the industrial equipment space, we've signed an amazing 3 new. We signed a lot of customers in the last 6 months. They all are at a post-MSA stage. None of them are contributing substantial revenues today in the 116 crores that we have invoiced in Q3. But as soon as it reaches a certain stage, which gets at least close to $1 million, is where we would be very happy to share. We do believe that by end of calendar year this year, with the customers and the MSAs that we have signed, our 15 customers, which are $1 million, will be close to 25, not much more, by end of this year. So that's the kind of traction that we are seeing. But what we have decided to do internally is, let them at least get to a good run rate of $1 million before we start sharing where we are.
And just lastly, any update on the CFO process?
So on the CFO side, 2 points. So one is we are doing a lot of interviews and amazing candidates we had an opportunity to meet, and we hope to announce a new CFO this quarter, which is in Q4. But at the same time, we have a very strong accounts and finance team of almost 25 people, with a lot of them chartered accountants and MBAs. So, it's not an internal efficiency improvement per se as of today, but it's definitely something that we want to bring on board from a larger perspective. So we will announce that in Q4.
Because I think sorry. At least because I was just wondering, this could be a great opportunity to get a heavy hitter. We can always use our the ESOP pool that we talk about, and maybe get a heavy hitter on board. From
absolutely. As I said, we are in the midst of the interview process, and we hope to announce that. We will announce that in Q4.
Sure. Thanks a lot, Jigar. Thanks a lot, and all the best.
Thank you.
Thank you. The next question is from the line of Manav Kapasi, an individual investor. Please go ahead.
Hello. Yeah, congratulations on a great set of numbers. So just wanted to get a sense on the order book, or the quantity of your unexecuted deal size currently. So, we can kind of gauge the potential growth rate for Onward for the coming year.
Yes, hi. Good afternoon. Good evening. So on the order book, we are not sharing the order book details as of today, especially because of our ER&D revenues, because our customers are giving us long-term contracts, but not small POs. But in terms of the growth trajectory, we do believe that this year we are on track to grow 40% plus in terms of organic revenues just from our customers. And we do believe even next year we are seeing a good visibility to not only beat the NASSCOM or industry estimates, but continue to grow at a very good pace. But from a focus perspective, please keep in mind, next year our goal, as we have shared, is to prioritize double-digit margin on a quarterly basis, at least on an annual basis. And everything is looking pretty exciting as of today, and we hope to share more positive information with all of you very soon.
Okay, great. Also, one follow-up on the previous participant's question on the new client deal wins this quarter. So, can you describe a bit more in detail as to what are the nature of work of these projects? What are we doing to help them? And we just want to get a better idea on what Onward is doing there for these clients.
Sure. Let me explain the business model of Onward Technologies, how sort of we transition post-COVID. Our vision was that we would try to focus only on 10 customers where we can do $10 million of revenue per year, which means we had to focus on customers which usually have $500 million of R&D budget, if not much more, or billions of dollars, right? So we are one of the suppliers to these customers and not the only supplier. And hence we changed our entire sales model and our delivery model towards these customers. So a significant portion of the 97 active clients that we have fall into this category today. And the rest of the smaller tail accounts is what we are evaluating what we do next. But coming back to your question, so on these customers, we provide 3 levels of services. We provide digital services, we provide electronics and embedded services, which is EE, and third is we provide the mechanical services. Mechanical engineering continues to dominate or be the substantial portion of our revenues, where we provide from product engineering, change management, manufacturing engineering across various parts of the industrial equipment or transportation or the automotive company. Then comes the embedded and electronics piece and the digital piece. So on the embedded piece, we are focusing on ADAS, we are focusing on hardware engineering, software engineering. We recently invested in power electronics. We are investing in telematics. But these are the way I would like you to look at it, how I look at it is, these are very focused based on how the customers want us to build capabilities, right? So where they have existing suppliers for some of the other work that they do, but in some areas they are looking for a new young supplier and they come to us to build capacity. These are multi-year time and material contracts, so where we get paid based on hourly or a monthly basis. And the third is on the digital side, where our entire focus has been on the whole digital transformation journey, but in particular it's been on the automation side, on data analytics and data science. So each of them continues to grow double-digit month on month, and it's all about adding capacity at a very, very fast pace for our existing clients.
Great. Okay. Thank you so much. All the best.
Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Pratap Maliwal from Mount Intra Finance. Please go ahead.
Hi, and thanks for letting me back in the queue. I just had a question on the presentation. Under the revenue by contract type in FY23, I can see that the time and material revenue, which used to be in the range of around 75%, they've gone close to 90% for 9 and FY23. So is there any reason here, anything to call out, and is there any change in maybe the nature of deals that we are winning or the type of work that we are doing? Anything to call out here?
No, absolutely. Good observation. We've shared this before last year as well. And again, for me in particular to sort of rebuild Onward Technologies from our history and legacy to where we want to go and build the customer trust and attract a high level of extremely competent talent, we decided we will focus on time and material as a business model from 0 to $100 million in revenue. So as a nature, we are focusing only on time and material, but a majority of our deals, I would say 95% plus new deals, are all T&M only. And we are not actively pursuing or participating in large fixed bid projects. That gives us the ability for regular, sustainable, recurring quarter-on-quarter revenue that helps us improve our cash flows, and I think it will help us improve and build a solid company if we can get to the first milestone of 100 million. And post that is when we start bidding for the larger fixed price deals.
Okay, sure. That helps. Thanks. Just another question. I wanted to kind of get some more understanding on our cost structure. Now, related to a previous participant's question on the 25 crores kind of investment. So you said that we have investment in 3 areas: the delivery capabilities, sales side, and the TAP program. So as you said that we're still investing in the delivery capabilities and everything, earlier you pointed out that I think we're also going to be investing in the TAP program. So how much of this investment of 25 crore cost is actually going to come back into our cost structure? Because I think in earlier quarters it was pointed out that with this investment cycle largely done, most of the revenue will flow to the bottom line. So how much of this cost structure is actually coming back in?
So let me give you how I look at the company, right? So basically we've gone from again, if you look at Onward revenues, same time last year, we were at 77 crores in terms of revenue per quarter. We have jumped from 77 crores to 116 crores. And we have to get to, let's say, about 200 crores a quarter in revenue to hit the first milestone of, let's say, 800 crores. Let's say if the dollar is at $80, maybe it goes up and down. But that's how we are looking at, right? So when we started planning, we looked at from 77 to, let's say, 200. And that's how we are still looking at it. Traditionally, we would invest in the old areas where Onward was, where 99% of our revenues came from, which is the mechanical space. All the new investments are going on the software side or on the digital side, right? And those areas, we are still at a very, very nascent stage. So we are investing to build capabilities, to build the client trust. But this is not happening with we sitting in a conference room or on a Teams call making decisions. It's happening on a collaborative level with the customer, with the OEM, where the OEM comes back and says, okay, can you guys build capabilities around this particular area? And then we will go back and work on a business plan and go back and jointly work with them. So now coming back to your question of from 25 crores, how much is the investment? I think not substantial in terms of, I would still say it's going to be about 30 to 40% of that, but it's all on the delivery side. And that's why for me, it's a very good investment because that goes straight to the top line and the bottom line. Moment those people start getting productive.
Okay, thanks a lot. And just one last question on the demand side. Are we seeing any stress in any maybe geography, any vertical? Because I believe other peers are also calling out that the demand side, the macro uncertainties are there. Are we seeing any stress in any geography or vertical that we operate in?
So we are not seeing any stress, or we have not seen any slowdown in terms of, obviously there was slowdown last quarter because of the holiday period and all the various news articles out there and a lot of the layoffs happening all over North America and California, especially in the big tech or product companies. But from a services perspective, outsourcing perspective for US and Europe companies leveraging India cost advantage, we are actually continuously increasing demand. And it's all about us in terms of prioritizing whether we are going to grow, top line or bottom line or balanced. And then we as a company, as a management team, as a board have decided balanced growth. And hence for us, the demand continues to be there, but I think we're going to start seeing a very different Onward starting next quarter.
Okay. And did you see any higher than expected furloughs this quarter, which affected the revenue growth? Did something like that, anything happen?
Sorry, because everybody has different definition of furlough, if you can just add a bit more.
I mean, the peers are actually calling out that they've seen some clients, maybe some client-specific issues, or maybe in general just some greater number of furloughs than expected in certain verticals. So just wanted to understand that, has anything of that affected us?
So it's a very natural thing. So, we're not seeing anything unusual in terms of this quarter compared to what we saw last year or even what we saw pre-COVID. I think for us as a young company, it's very natural. And there'll always be 10% of clients which will have shutdowns, which will have furloughs, which will have layoffs. Because keep in mind, for them, it's the last quarter in US, October to December, where they deliver their numbers. So I think it's based on client strategy. But and that's the reason we're not dependent only on few customers. We have a lot of customers where, okay, there's some slowdown somewhere, you can move that, the revenue growth will come from some other clients, and that's what we are seeing.
Okay. Thank you. And best of luck for the quarters coming ahead.
Thank you.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of VP Rajesh from Banyan Capital Advisors. Please go ahead.
Jigar, just a follow-up question on the demand side. So, in this current quarter, as you are out there doing business, are you seeing any softness? And secondly, if the clients are shifting business from other vendors to you, or you're just winning new business? If you can just throw some light on these two aspects as to what you're seeing currently.
So, Rajesh, we are seeing, in terms of demand, we are seeing, again, for us, there are two types of customers, just to clarify. So there are some customers where we're already doing a lot of revenue with them, and we have a multi-year relationship with them. Now, with those customers, we continue to see a lot of traction in terms of new opportunities, new areas, or new where our teams are farming or building relationship, showcasing new capabilities. So we're definitely seeing a lot of traction from those things. And those areas, there could be our customers could be moving work from other tier 1 suppliers to us. And on the other side, the majority of our new customers, I would say people who are between, let's say, the top 15 clients and the 97 clients, which are new customers to us. Now there, we are seeing a demand that we have never seen before. And I think it's a bit too early for us to share whether it's coming from replacing other supplier work or new demand. We would like to believe it's new demand because it's all digital demand, right? It's not mechanical work which the customers are outsourcing or hiring us to do. So definitely we are seeing a very optimistic and positive momentum in terms of what customers want to do or what they're talking to us about.
Great. Thank you. That was very helpful. Thanks.
Thank you.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. Participants, to ask a question, you may press star and 1. Reminder to the participants, anyone who wishes to ask a question may press star and 1. Participants, to ask a question, you may press star and 1. Participants, to ask a question, you may press star and 1. The next question is from the line of Jatin Soni from AGI Capital. Please go ahead.
Hi, Jigar. Thanks for the opportunity. Can you talk anything about the inorganic growth for the company? What is the demand? What is
Sorry, Mr. Soni, the audio is not clear from your line. Please use the handset mode.
Hello.
Yes, hi.
So the line for the current participant has got disconnected. As
Sure.
there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments.
So thank you again, everybody, for joining in today. Last quarter was special in spite of all the holidays and negative news in the world. I believe our team was able to deliver good growth, and 116 crores a quarter is the highest that we've delivered in our history. Moving forward, we continue to see very positive momentum in terms of the demand from both our existing customers, top 15 customers, and the new customers that we have signed over the last 12, 18 months. We continue to invest in building our capabilities in digital and embedded. And lastly, our focus as an organization, as a team, is to deliver double-digit margin in this financial year, and we are all very excited in talking and reconnecting with all of you guys next quarter. Thank you again, and have a lovely day.
Thank you. Ladies and gentlemen, on behalf of Onward Technologies Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.